The Dow making a big recovery yesterday, reversing those huge losses that we saw in the morning to eke out an actual gain. Marginal, but it was a gain. Check out the futures this morning. You're going to see right now that the Dow's indicated down by about 42 points. S&P and the NASDAQ indicated up slightly. Anastasia Amoroso is here. She's the head of thematic strategy at J.P. Morgan Private Bank. And Anastasia, we were watching yesterday. What were you thinking as things started to sell off? Do you think it was weird? Do you think it was something that would stick?
Well, definitely not weird, because I think fundamentally the thing that markets fear most in 2021 is that this virus mutates and it's going to evade the vaccines. And of course, that was the headline. That was the news that we're seeing out of London yesterday morning. So that's why the markets were jittery. And by the way, the second fear is that the vaccine causes side effects and severe reactions. And of course, we have that kind of in the market as well. So those are the fundamental reasons why the markets were pulling back in the beginning. But I would also say from the technical side, it's almost as if the market is looking for an excuse for a sell-off. Because if you think about this rally, it's been a record rally. And yes, cash positions is still high, but they've diminished quite a bit. And money has been finding its way into the equity markets. So you've got the flows that are really flowing in. You've got the hedge funds. You've got the momentum traders that have been in this market. So I would say short term, things are looking a little bit overbought and a little bit stretched. So when that's the setup, if the right catalyst comes along, whether it's vaccine jitters or mutations or something else, when the right catalyst comes along, the market is likely to at least consolidate, pause, and maybe even pull back. And so that's kind of what we have playing out right now.
For 2021, though, you think that there could be more upside potential, that the market is not quite anticipating that we could see a third entrant into the market in terms of a vaccine. If J&J comes in with one, you say that we could be back on track and looking at a global recovery faster than expected.
That's right. I think the market consensus right now is because of Pfizer, BioNTech, and the Moderna vaccine, we're going to have a large portion of the U.S. population, 50% plus, vaccinated by the beginning of the summer. Well, that is not taking into account what happens if the J&J trials are also successful. And recall that they just started the phase 3 trial. We're likely to get the first data readout in late January. And if that is as effective or as safe and somewhat as effective as Moderna and others, then this could mean an additional, hundreds of millions of doses for the U.S. market. And in fact, globally, it means over 1 billion doses. And by the way, this is also a single shot vaccine versus the other two that are double shots. So what I'm saying is that this is not yet being reflected and priced into the markets. Vaccine expectation by the end of the summer, that's definitely baked in. But the potential for J&J to come in and for a large portion of the population to actually get it in Q1, beginning of Q2, and for us to be back online in Q2, that is not yet in the market. And if this turns out to be the case, this is why we're looking at some of the cyclicals.
Shepard Smith here. Thanks for watching CNBC on YouTube.